I know you've heard this all before, the whole psychology mumbo jumbo, but you're going to have to hear it from me too, because otherwise this my message is not going to be complete. I need a concise, complete message to you guys. And there are a few things that are of utmost importance. 4 things for me that's going to turn you guys into traders. You know that there's all the risk involved, and you know that you shouldn't be risking money that you can't afford to lose. You know, to get to a specific goal in this game, you're going to have to work. Yeah, it's not just a get rich quick scheme or anything. We need to work at this because our competitors are doing a hell of a lot to beat us. Yeah. So psychology is number 1. And the way we approach it here is we need to start knowing why we trade. Not just the money involved and the financial freedom and all of that type of thing, and you want to be able to be home and you want to be able to work from home. Not that. What I mean by what it is you want and why you are trading, I mean, what exactly do you want to do with this money? If we know what we want, then we constantly know what it is we are risking. So every single time we pull the trigger to trade, we know what it is we are risking. If it is a diamond ring for the wife, the girlfriend, or whatever, every single time you pull the trigger, you are risking that ring. This is the importance of knowing why you trade. You need to just identify that thing that the money is going to buy, because the money is not the material thing here. The thing that you want is what I want. Alex has given me a good example, what he wants to do with his money, and I don't think anyone else has. You don't have to tell me, but just know what it is you are risking every single time you pull the trigger. Now, the next portion of psychology is you need to put first things first. You can't be trading if you are thinking about food, or that you didn't get enough sleep, or that you need to pay any bills now, or that you are sitting in your job. Yeah, you need to go to work today, so you can't be thinking about trading, because our competition, they come to their job, the hedge fund, to trade. And what he does, he concentrates on a specific commodity or a specific asset class, and then even a specific time frame. So this guy's a master at that particular commodity. He's a master at this particular time frame. And then we expect to beat this guy while we are still thinking about paying the bills, or we are sitting at our desk job. So this is why we need to put our priorities first. Now, the nice thing about the strategies that I'm going to show you within this course is that once you know what your priorities are, we are going to be able to work around a specific plan for you specifically. I asked you guys all to have a plan, and all of you have submitted a plan. We will work on that individually together. And then you need to trade the plan, otherwise you plan to fail. I like that saying. And then you can treat this like a business. The next thing with psychology is to know yourself, what type of a trader you are. Are you just an investor? Are you a swing trader, a day trader, an intraday trader, and a scalper? So I know you guys are not investors in the market. You want to have some action. You want to play in this market. You want to be taking trades. How often do you take trades? All depends on your trading plan and also what type of a trader you are. So we are going to describe swing trading as one that takes trades on the 4 hourly or on the daily, and he holds those trades for a day, a week, or even sometimes even months. Then we're going to have a day trader where he hardly ever keeps any trades shorter than a day. It's at least 1 day to a week. So these guys are trading off the 4-hourly chart. And our strategies are going to copy that system as well. And then the intraday scalpers, those of us who has a lot of time and nerves of steel, those are our intraday and scalper type traders. So we're taking a number of trades within a day, a number of winners and a number of losses. And overall, we want to take more winners than our losses and keeping our losses small and letting our winners run. And then the other thing that's important to the success. So the first one was psychology. The next one is risk. So we know when we are risking the right amount of money, when we are making a lot of money, but still we can sleep at night. Max Gunther, the author of Zurich Axioms, wrote a book that I base my risk strategies on. So risk the amount that you would care if you lose it. But don't risk too much that if you lose, then there are dire consequences. Not too little to make you not care. So it's different to the whole 2% rule that we always learn about. Later on in the course, we're going to go much deeper into risk management. Zurich Axioms by Max Gunther. All the risk strategies that I follow is all based on this one. So we had psychology, which is the first one. How do you feel today and all that type of thing. Then we had the keep our risk under check. And then it's our strategy, our technical and our fundamental strategy. What do we do every single day religiously? How do we actually follow the strategy? So I'm going to teach you a few different entry techniques inside of this course. So it could become overwhelming that there's too much information when you get to pulling the trigger, because I'm going to show you more ways to get inside a trade, because a lot of us suffer of lack of patience. We don't have patience for a good setup to occur. So, or based on the beginner strategy. So we need something more. And this is all acceptable. It's nothing that we need to change. Being patient and all that is important, but it's also sometimes not possible to day in, day out, sit without any trades. Yeah, it makes you feel frustrated, and then you start to strategy hop, and then you'll never get to your specific goal by strategy hopping. So inside this course, the strategy and technical and fundamental, we're not going to cover holistically fundamental. I'm going to give you a basic overview as a bonus part for this. And the basic overview is really all that is needed to just develop a specific bias, a specific direction. So I'm going to give you the tools that I use for fundamental analysis. So it's going to start up with how to set up our charts, because we're going to use different tools of trade here. The tools of the trade is different. We're going to use Aikanashi. We're going to use moving averages. We're going to do a top-down analysis on the monthly and the weekly and on the daily. And then we're going to look at the 4-hourly and then the triggers, the RSI diverged trap. This is the entry that the beginners course focus on. And then we're going to have the fib trap, and there are 2 different fib traps, and then the 786, and then the circle of liquidity, and then also a conservative entry. And then we'll cover risk management and fundamental analysis. Is the quantitative analysis. So the 2 main reasons why we need to have quantitative analysis. One is so that we know what we are doing and we know where we are headed. So if we stick to our plan, what is likely to happen? That is what quantitative analysis is all about. So we need big sample sizes here. For quantitative analysis, we need big sample sizes. What I mean is we need a lot of trades. The more trades we have, the more closely our data is going to approximate our real account. So the performance over a long period of time will be similar to that of your quantitative analysis if we have a number of trades. If we're choosing 10 trades, our quantitative analysis is not going to have any value. Yeah, small sample sizes are bad. And what we're going to use there again is our MyFX book. The same as with the beginner strategy. So can you trust the data that you input on your MyFX book? That is the whole question here. Can you trust that the sample that you are putting in your MyFX book demo is going to reflect the same results on your live trading? It's probably not going to reflect exactly the same because you're not trading a real account. I would like you guys, if you're not trading a real account yet, to try and switch over to that real account now and then link the MyFX book to a real account. No, it doesn't matter if it's a small account. If it's under, say, $500, then I suggest you opening a cent account just for the risk purposes, because a lot of our strategies are going to include taking 3 entries instead of just 1, or 2 entries instead of just 1, and closing portion of your positions and all of that. So I suggest, once you feel comfortable with your performance, to try and start opening a real account. Okay, so motivation to stick to it. A lot of people uses cars, women, whatever you like. So find out what it is that's going to motivate you to stick to it, even if it's a picture of your family, a picture of a car, whatever it is. So just have this in mind all the time as you are learning. Yeah, you will, if you have a losing streak, it's normal. Try and stay motivated. Now, we're going to focus a lot on trend trading, and I'll show you why. And my motivation on the trend trading is these guys over here. Ed Sekota, Richard Dennis, Hetty Green, and Muhanisa Homa. These guys they all have one thing in common, other than just the trading, or that they are wealthy, but they all are trend traders. This guy here has a hedge fund that focuses on high frequency stuff, but it all comes down to trend trading. Richard Dennis, I mean, he has the turtle traders. I don't know if you heard about the turtle traders. That's a trend trading strategy. And all the original turtles, there are 12 of them. They all have their own hedge funds, and they are trend traders. Hetty Green, this lady was trading in the 1800s, and she was a trend trader. And Monisa Homa, he's supposed to be the most famous trader of all time, because he's the one who created the Japanese candlesticks. But nobody knows who he is. But for me, he's the most famous of them all. I mean, all the price action stuff all comes from him. So Ed Sekota, this is my motivation for trend trading. Yeah, whatever yours is, this is mine. These guys made it work in the past, and they're making it work now with their hedge funds. If we look at Barclay Hedge and we look at the performance of hedge funds over the last few years now, especially since 2008, the whole credit crunch, since then the hedge funds hasn't been performing very well. But the ones who has been performing are all trend trading systems. So that's the reason I focusing the Master Trader course on a trend trading strategy. Ed Sekota says, Don't be overly concerned about whipsaws, because a good trend pays for them all. So you get stopped out a whole lot of times. But if you have that good trend, then it pays for all those losses and you're making a lot of money in profit. I had one trade, the pound versus Australian dollar. That one made more than 1,000 pips. So that one pays for a lot of the losses that I've had in the pound. I mean, if I had 2 or 3 losses even in the pound, this one trade covers them all and profit on top of that. So when you catch a trend, you ride it to the end. And I think that the tools that we have here is going to really give us the best chances of riding this trend right up to the end. And when you show a loss, you give it a toss. This is all in a song, but Ed Sikota wrote. You should listen to the song. When you show a loss, you should give it a toss. So don't even bother about the loss. Yeah, just think of that entry. Have you followed the rules properly? Can you find any errors? If not, then that is a good entry. The good entry is only the one that you followed the best. Yeah, the most closely related to your strategy. That was a good trade. Not that it lost and now it's wrong. No, it's not wrong. Yeah, it's not wrong. So we know if our risk is right when we make a lot of money, but we can still sleep at night. These are all quotes from Ed Sikota. When the price breaks through, there is a shock in the news announcement, then what do? We need to do nothing because we have our stops already in place. So all the strategies is all based on these guys, and I consider them as my trading heroes. And the trend trading strategy I use focuses on all the things that they teach us. Richard Dennis, together with William Eckard, they started the Turtle Traders. Hetty Green, she says, all you have to do is buy cheap and sell there. And Munisa Homer, he was the founder of the candlesticks that we use. And he was a trend trader. He made over $10 billion. If we take into account inflation, he traded since the 1700s. And the stuff has all stayed the same, really. Yeah, it's just we mess around with a whole lot of unnecessary things. We need to try and keep it as simple as possible. Okay, so what do we know so far about our trading if we take into consideration the beginner strategy? We know that we have a resistance there and we have a support line there. And we know that classically we trade when we have a confirmed accumulation phase or a confirmed range. This is classic training. So when prices hits the first point of the range here, or the first time that there is a change in a trend, then we don't trade there, neither year, or year. This is our classic training. Classically, we should be waiting after all of this has happened, and then we are in a confirmed range, and then we can start looking for trades here. So there is our first trade, and then here is our second trade as prices comes down. And then as long as prices are staying inside this range, then we are trading the beginner strategy. Yeah. But we're doing it a slightly different here because we want to catch one of the first opportunities. So the first time that we catch our range trade is not here, Like they've waited 1, 2, 3, 4 times. So as far as the beginner strategy is concerned, they've missed out on 2 opportunities already. We are trading also the third one and the fourth one. So this is aggressive trading now, because conservatively they would follow the classical training, where we first need this confirmation, before we even start looking at that. So our beginner strategy modifies the classic training by taking into account that opportunity there and that opportunity there. So that is our beginner strategy. What I'm going to do quickly is just ask you if you can still hear me and see the chart. Can you see the chart? You can just type in the box. Great. Okay. Now I want you all just to participate with this one for me, yeah? So we have this barrier here and we have the barrier here. So these form part of the beginner strategy. So now, if prices are here right now, yeah, prices are just there. Can you tell me if this is going to go up or down right now? I want 4 answers. Up or down is the answer. It's either up or down. Try not to copy anyone else. Just say up or down. I don't want any reasoning or anything else. Up or down. Okay. So in that case, this is going up. Yeah. How much money did you put on this trade, Alex? $10. Justin, you also put $10 in that trade, right? And Gavin, you also put $10 in the trade, so it's moving up. But unfortunately, I've got more money, and I decide I'm going to push this price down now. And it only took me to do that. Just me. Just one trader. I had the money and the will to move prices down to this level. Because I know there are contracts here. I know there is opportunity here. And I know that Boeing wants to buy out Rolls-Royce so that they don't need to buy the engines anymore. They want to do it themselves. So I know there's a massive trade coming in later on during the day. So I'm moving prices down here. I've got a motive and I've got the money. But it was just me. So irrespective of anything else, irrespective of any strategy that you might have, it doesn't matter. There's always going to be one person that it only needs this one guy to move the price anyway. So we can never know which way it's ever going to move. The only thing that we have counting for us is the probabilities. And the strategy is going to help us with probability. And the way to quantify this is going to be with my FX book. So we have our resistance here and we have our support here. Now prices are moving up toward the resistance. What we are trying to do is we are trying to identify how prices are moving towards the resistance. Because there are more opportunities here to get to this particular goal here. Prices doesn't range and get to any sort of a goal. It's never going to get here if it's going to range. And it's never going to get here if it's going to range. So how does prices get toward this area? What do we call that sort of a movement? Can you tell me what we call this movement going up toward this particular area? Yes, it's a trend. So we've been trading this all along. However amount of accumulation and stop losses has been taken out in this area, this is all that we know in the beginner strategy. But we know that the market does go up and it does go down. So there are two movements here. It's the accumulation phase and the trending phase. So I feel if you know the accumulation phase, like with the beginner strategy, you know how to identify when we are in a range, then you can be trading all the time. If you've identified this and this, what do you do when it gets here? What do you do when prices gets here? Do you buy or do you sell? Yes. You sell when you get here. What happens if this starts going on? What happens now? You sold here and this starts happening. What do you do now? Do you buy or do you sell? Okay, that's excellent. And what happens if this now looks like that? Would you buy or sell now? And then if it goes up like this? Do you see how complicated this whole thing becomes? Now, what we are trying to do with this strategy is to try and simplify that whole area there. To try and justify the reason why you are not buying or why you are selling. So the course is built in a way that's going to help you identify when to buy when you're in this sort of a difficult situation here. Because this is what we're really faced with. We wait and we are patiently waiting for this area here. We are waiting for that area here and a stop on. We want that. We want that perfect look there. Yeah. And it's very profitable, this. Honestly, you can probably get 70% win rate if you wait patiently for that. But the problem is we are trading here, we are trading there, we are scared, we don't know. We need to have certain rules that really gets us in and stay in. Our stop loss is there maybe, and we just go irrespective of that happening. So this course is trying to get you confident in taking any sort of trades because you know very well what to do inside this range, but it becomes difficult when it looks like this. So what do we know about the market patterns now? What type of behavior do you know so far to get to a certain area? If there is a barrier, what does it do inside this barrier? This is your barrier here. It's there and there. And prices are trading here. So what two things happens all the time inside this area? Like, how does it move? Wow, we just covered it. Yeah, that's right. We have moves going up, trending, and then we have corrections, and the correction is also is an accumulation. So the only two things that we have getting up to a specific goal here is two things. One is a trend, and the other one is the accumulation. There's not enough power inside this trend to actually push it further up. So it needs an accumulation phase, or it needs this little correction phase here. So it only trends and accumulates up until it reaches a specific goal. Then all depend on fundamentals. It depends on a lot of factors if this is going to break out here into a new trend and then range again and then up to somewhere new, or is it going to go back in there? That's all that the whole market does. So it's trending and accumulation constantly, forever. It's like a living creature because the movement in here is made by you and I. It's made by hedge funds, made by banks. It's it's just one big living organism. So to be able to move up, it needs some sort of a stimulus to continue, because it's never going to move in that straight line. So it needs some correction, and it needs accumulation of more funds and more stops so that it can then move more up, or decide to go down to come and collect the stops there before it goes back up again. So only two phases we have. So it's simple now. We already know how to identify one of these states, and that's the accumulation phase. All we need to do now is add to our arsenal the equipment for trend trading. So now we're going to go to setting up the chart. But before we do that, can I just ask you, do you have any questions? You can just type it in there. Okay. Okay. So setting up, I've already asked some of you to set up. I just wanted to see how easily you can do this. Yeah. I think it's Johirul. Johirul, did I ask you to set up your charts based on the profiles? Yeah. Did you do that? Okay, great. And how long did it take you? Ah, great stuff. Yeah, so it's a 10-minute procedure here just to get your charts running nice and smoothly. Yeah. So what we do is we have all our majors and then all the crosses all set up. Let me just open up mine. Just see what's next. Yeah, then it looks like this here. So all the crosses and will be at the bottom here. So if you have your USD crosses, and then you will have your 8 different currencies here based on those crosses there. Let me just open up my broker. Yeah, I'll use this one. Okay, so my USD crosses there, my JPY crosses. And then this way, our 28 pairs are easily found. So what I usually do during like on a Sunday afternoon or whenever I go through my chart is I have all my crosses here. There'll be 1, 2, 3, 4, 5, 6, and then 7. And then that will run across the screen here, all 7 of the all pairs there. And then it's easily the analysis can be done easily. So I'm going to quickly go to the dollar crosses here. So I want you all to set up the charts in this manner, yeah, because the way we're going to talk inside that other room is like it's going to be on the dollar crosses. We are doing the dollar crosses now, whatever it is, yeah, and then we all know what everyone else is talking about. So if we take, for example, the dollar crosses here now, I will have the standard setup here on my MetaTrader. And then also right next to it, I'll have this setup. Now, this is something new to you where the strategy is concerned. Yeah. I'm going to use Heikin-Ashi candles with the trend trading strategy alongside traditional candlesticks. So I will always have 2 charts open, 2 currency pairs open, one with the traditional and the other one with the Heikin-Ashi. And the way we're going to set the Heikin-Ashi up is like this. So there are only 2 different indicators that we are going to use with this strategy. One is an exponential moving average, and the other one is the Heikin-Ashi candles instead of traditional candlesticks. So the reason I showed you those mentors of the past is because a lot of the strategies based on their techniques, and then Heikin-Ashi is just the perfect tool for trend trading toward the specific goal. So the setup is quite simple. You go to the favorites here, and then you just drop your Heikin-Ashi candles onto your chart. Now the standard Heikin-Ashi has red and white, but I like this gold going up and white going down. And then the EMAs, it's only an exponential moving average. We use the exponential because it smooths out the price, and it uses the most recent bars instead of with a simple moving average. It doesn't take into it takes into account more weight is focused on the bars in further history, whereas the exponential moving average takes in consideration the most recent bars, so it smooths out the prices much better. And what sort of let me just the indicator that we are the settings for the Heikinashi, the first one here is the 633 period moving average. You can write this down, or you can I will also just type it to you guys in the chat. So the 633 period moving average, we're using that mostly for targets and for entry points. And then we have our 200 period moving average here. That one we are using more for the direction we would like to trade in. So if prices are underneath there, we would like to look for shorting opportunities. So if we look at what's happening here now on the euro versus the dollar, can you tell me what the trend is? Is it up or down? If you would want to trade now, would you want to trade up or down? Yeah. Yeah, because it's simple to see that this is down. So irrespective really of what is happening with the fundamentals, yeah, we would want to trade this down. So that's all underneath this 200 period moving average. So it's giving us a clue into which direction we want to trade. Now, looking at this, does the beginner strategy fit? Does the beginner strategy fit this technique here? You know this thing is going down. Would the beginner strategy fit here? No, it won't. So now immediately you filtered out the beginner strategy on this one. So you know if you would like to trade the euro dollar, you would like to trade this down. Right? If we take another pair, for example, I'm going to go to the pound now. Yeah. Yeah. Which way would you like to trade the pound now? Up or down? Yes. Do you see how easy it is now? Within a second, you know that you would like to trade up. Now, I'm only looking at Johirul, but I'm sure everyone is looking at this now. So, irrespective of what is going on fundamentally, yeah, we can see on the chart, it's obviously that this is a fundamental reason for these massive candles. Do we know exactly what it is? We might. But if we don't, does it really matter? If we never knew the reason why this is going up, does it matter? I said in the beginning that it's all about making money here. So if you know this is going up, then, look for long opportunities. Now, the reason I'm showing you the way the charts are looking now is because later we're going to do a top-down analysis, which focuses on direction and it focuses on targets. Now, without even showing you anything, most of you, or all of you, already know the direction you would want to trade. Now, that is something very, very strong. For a retail trader, he you know, most of them don't know which way they want to trade. In a day, they would be trading maybe the same currency pair and trading it up and down and up and down and up and down, as if they know the one guy sitting on the other side when he's going to start pulling the trigger going the other way. The fact that we don't know this information is the reason when you see it looking like this on the chart, to remove the ambiguity here and know that long is the way you want to trade. If we go across any of these examples here now, this year is actually a setup happening to go long on the dollar yen. This one, if you look at this, I have to show you the strategy later, yeah, on how this works. But I just need you to have a look at this and do the homework that I'm going to send you in the group. Yeah. Before we start on the strategy, I just want you to know or feel that which way would you like to go here. On this one, for interest sake, which way would you guys like to trade now? Okay. And from Gavin and Justin, what do you think? Okay. Okay, great, great. Okay, so I showed you the tools that we're going to use on the strategy and showed you how easily you could identify which way to trade. And do you think having a direction, a bias, is a good idea? Yeah, by just having a glance at the chart, or do you prefer the scalper's mentality of not knowing which way you want to go at the moment? Okay. Okay, so the tools that we used for the beginner strategy, it was oscillators. Yeah, it falls under the oscillator group, not really the trend trading group. So the RSI we used, RSI trading between two levels, the 70 and the 30, and then we used the envelope and volumes and ATR. So we will use volumes later on. As I said, the strategy is going to combine Heikin-Ashi and the traditional Japanese candlesticks. So now with trend trading, we use a different set of tools now. It's only two indicators. It's the moving average, but it has it's an exponential moving average, but it's 4 different settings. We have the 633, that's for the targets and the entries. Then we have the 200 period moving average. That's also for targets and entries and for the main direction. Then we have the 36 period moving average. That is our trend following EMA. And then we have a 12 period moving average. That's for volatile trends. So this will become clear when I go back to the chart now, yeah? Okay. Okay, so we have all the necessary tools on this chart for us to make an analysis. Yeah, up or down. So what we do here is on our weekly chart, we have all our indicators on the on the weekly chart, and we see that for the last few weeks, prices has been going up, and then we have a 200 period moving average here. And this 200 period moving average is going to act as a resistance level in this case. And if we see there is some action based on that resistance level there, and there, and then there, and there, if we see the prices are reacting off of it, it means that you could look at this as an opportunity here to go short down to this area. So on the weekly chart, what we do is we look at where prices are at the moment. So step number one for this strategy is this is where prices are trading right now. And slightly up, there is a resistance level. Boom. And luckily, this resistance level is now corresponding to resistance over here. It was support over here, 200 period moving averages over here, support over there, support there, and there. So this is a good area for us to look at. Always close to price. Prices are here. Where's the most likely area now again? So this is the 633 period moving average. We can come down and say this is a good area. So we have support there, and support there. So this becomes a playing field for us to play in. And that's a nice big one, 400 pips. Once you have your playing field, you drop down to the lower time frames. And then you still have your playing field here. So what has prices been doing all the way up toward this level? It's been trending. And that there is a trend line. The 36 period moving average follows the trend. So when you draw a trend, it's ambiguous. But if you can follow the 36 period moving average as closely as possible, and then you have a better chance of successfully drawing the trend line. Because what you have here now is your classical trend line drawers, and then you have your guys who likes to follow a dynamic trend line as well. So both of them are in agreement, which means you could see this trend either going up or breaking. And if it does break, and then starts going back down, you can look for shorting opportunities there. So the way we're going to do this strategy is we're going to start off with a weekly to find out what it is exactly we are going to do. We're going to draw our playing field and then see what is the most likely thing to do. And on the weekly here, we also have another trend line coming down. So there is a possibility of prices moving short here, obviously after seeing a setup. Notice the confluence in the area. Once you have confluence in an area like this, which confirms which agrees with a trend line, it agrees with a dynamic support and resistance, it agrees with a static support and resistance here. And it's a very good area. So it is likely, and it's rightfully doing this now. Look at the sizes of these candles as compared to when it was volatile here. It's indecision here. Could this be a manipulation at play? Could we get a manipulation up and then down? Something is bound to happen in this area. But notice how it respects the EMAs. Notice that how you can easily find these areas. If we take any sort of a random chart, suggested chart for us to look at quickly in the group, and then, but not gold or anything like that, just the 28 different crosses here. I'm just going to choose the first one that pops up on the screen. Okay, the Aussie dollar. So that is also under my US dollar crosses. So I can leave my US dollar crosses there and I can go to the Aussie versus the dollar. Let's first go on the traditional thing here. So this is my traditional candles. All right. Okay, so this is how it looks on my traditional candlesticks. Yeah, let's have a look at what this looks like. A trend line coming down here. Yeah, from this point it's coming down. Let's see how we could have taken some sort of advantage of that. So doing the top-down approach here, doing the top-down analysis, we start off with a weekly chart. Yeah, so if we look at this point here, I said that your 36 period moving average is your trend following EMA, right? So you need to try and draw the trend line as closely as possible to the 36 period moving average so that you can have a confluence of the guys who likes drawing it statically, and you have confluence with the guys who likes dynamic. Do you see how much more easy it is to draw a trend line with the use of this 36 period moving average on Heikinashi? We can see this is a downtrend, right? And we can see we have our 200 period moving average being respected here as prices were coming up. Yeah. Now just watch this. This is a downtrend, and we've identified the trend with a 36 period moving average and a static trend line. And this is on the weekly chart. If we draw our things now, this is where prices are, and that there is obviously a level. Is anybody going to disagree that this, from that point, you go up? Where did prices come from? It came from this level. And look at how lucky we are. That level also corresponds to a trend line, static and dynamic trend line, and it has here support and resistance and there. Do you agree with that this is a good resistance level? Yes. Do you agree that this is where prices are right now? Where is the most likely place where these guys are going to take profit? Tell me when to stop this line. Okay. Yes. We like to use the wicks of these candlesticks and the body. So in between there and where we are getting the most touches, that is where we would like to place our support. Now, if we go to the monthly, just to see if there is anything further back. Yeah. So this looks like a very important area, this. Yeah, it looks like a very important area. And on the monthly, things are going down. Things are looking bleak for the Australian dollar. So it's not going to be easy to convince me to start looking to buy. Really, it's not. Who would like to buy in the face of that? None of you. Monthly chart, there's our resistance, right? This is our weekly. So now we got our playing field here. Let's continue drawing this down. Yeah. So if prices comes up here, what would you want to do? Yes. And then where would you like to place your target? Yeah. This is where you would like to place your target. But let me show you this. So this is my weekly and it's going down, right? And this was the area where we were looking at, because there's it just corresponds to everything. That is 69,117, right? 69,17. If we look on our thing here, 69,17, where is 69,17? Yeah, look at that. Look at that confluence of your beginner strategy. You have excursion beyond the mean, right? At 69.17 price level, right? 69.17. I go to my thing here. Look at what's happening at 69.17. I have a confluence of a trend line that you've missed on your thing here. Yeah, you've missed that. You didn't see it. All you looked at was just one thing here. But now you can see it corresponds to this. It corresponds to a level. It's looking short. So why not just go? Why not go short? Then you want to go short as prices are coming up into that level. Yeah. Then you go dropping down to the daily. Let's take that away. Delete. Now you see prices are coming very close to your 200 period moving average. Yeah. Your trend lines needs to be adjusted here because it's coming from the weekly, but that is exactly the same line. You've only had this two before and it's coming down. You're trying to draw your line together with your 30 with your 200 period moving average. So there we go. You have a perfect trend. Prices are fighting in this area. You know where your target is going to be. Is it a good target? Yes, it's 200 pips. Yeah, you've got a 200 pip target. Now expect to have a bigger stop loss. Expect to have a big stop loss because your target is 200 pips. You're not targeting just a small little amount here. We are looking for trends. If this thing breaks down, you can get thousands of pips. If you've made losses here in between, this one will pay for all of that. Now, that there is the area that you are looking for any sort of a trading opportunity. That, yeah. Now, if I drop down even further, I'm dropping down. You see these triple tops. This is the area here. You agree prices has moved up into that area, yeah. And then look at our sort of a trigger. Remember, let me just go back and highlight the area. There's confluence. You see the confluence? Let me just make this into a different color. Not that, this. So prices has come up into the level, and it looks as if it's touching a trend line, and it has all these other things. Remember, it has a whole lot of confluence there. That's the area. And you have this as confluence. So everything is pointing short. You have your weekly right there. Your daily prices are coming into it. Your 4-hourly prices are coming into the level of importance there. And then you find yourself a way into the trade. There. Let's see what happens if we can see any entries here. Now you only know one entry so far. Yeah. What we're going to do here is quickly put a RSI on, just to see if we can get some more confluence of an area. Oscillator, relative strength, and that's okay. Yeah, if you see there, prices are going up. That's going massively down. No reason not to take that trade. No reason. And that was worth a big amount. I think I even took that trade. Yeah, I took this one. Yeah, that's a big one. Do you want another example of a top-down approach? Just shout out any chart that you want to try and have a top-down approach on. Gavin, do you are you happy with that? If you want, you can also just send me another chart that you want to look at. Yeah, it is, Gavin. It's a different strategy. It's a trend trading strategy. It's not the same. I'm not going to show you the same stuff that you already know. Yeah. So you want to look at Swiss franc yen and dollar Swiss franc. So let's look at the dollar Swiss franc quickly. So this is our dollar Swiss franc. Okay. This is how it looks here. Let's see how it looks on the strategy. We have a 633 period moving average here. So this 633 acts as a support. Because why does it act as a support? Because it's been doing that all the time. But do you notice that it acts as a support level here? Do you see how good this 633 period moving average is? So the top-down approach on this thing is going to be like this. Now, when we're looking at trading, we're looking to make money. Yeah. So when a chart is not looking nice, I don't like to second guess anything. I just want to look at something that looks nice. If I look at this, what has been going on here all the time? In this area, prices is coming down nice and fast. We can see this is a downtrend. It's the 200 period moving average here, and then it goes up. It breaks through a fake false breakout and comes back in. But look here, this is weeks on end. This is what prices has been doing for a few weeks now. That. So what are we looking at? We're not looking to trend trade that, are we? We can clearly see it's been going nowhere for weeks. So we cannot use a trend trading strategy for this particular pair. But what we do know is that this is where prices is right now. This is where prices has come from. And this is where prices has also pivoted off from before. Very strong because this one is close to a 200 period moving average. Now, if you see the moving averages are tangled here, this is the nice thing about the 12 period moving average here and the 633 period moving average here. Sorry, the 36 period moving average here. If it is intertwining like this and there is no direction, if the moving averages are doing this, like what it's doing here, yeah, it's not moving anywhere, then it's not good to trade any sort of a trend in that area. So what we need to do is, because prices are here, yeah, we don't trade here because it's not looking nice. But what we're going to do is wait for that and wait for that. So this is a patience game on this one, because we are mid-range here. Our playing field, we are in the middle. Anybody can kick this ball. It's like a scrum in the middle. Nobody knows which way that thing is going to go, either that way or that way. Sorry, it's it's in the middle. We don't want to trade there. If it was trading here, then we would want to go short. If it was trading here, we would want to go long. But because it's in the middle, I wouldn't want to gamble. I want to find another pair on my 28 different pairs, because I'm all about making money. I don't care about being right on which way that is going. I just want to make money. And in order for me to make money on this particular pair, I'm going to need to know which way that's going. And I don't know which way that's going. But I know my probability is higher if I'm going to wait for it to get to that level. And I know my probability is going to be high if I wait for that level, but not in the middle of it. So on my first step, on my weekly, on my top-down analysis, I know what I'm going to do here. And what is my position here now? If in doubt, stay out. And I'm in doubt there. The chart has told me this. By those moving averages are intertwined. It's not giving me a direction. So I am out. When will I be interested on this particular pair? At that two lines there. Thanks to the weekly top-down analysis, I know exactly what it is I'm waiting for now. Now, what are many other traders waiting for? I don't know. I don't know. But what I know is I'm waiting. Patience. This is where the patience comes in. So I don't even want to go down to the next level on this particular pair. Based on my probabilities, I want to have a much better win rate. So I'm going to stay clear out of that one. Are you fine with that? With that one? Was it Jahiro who's given me that one? Okay, Alex. So are you fine with that now? Yeah. With do you agree that it's difficult to trade that now? Yeah. Yeah. Okay. Great. And we had another pair. Justin wants the Swiss franc versus the yen. Now I'm going to just assume that is a gonna be ranging. So the Swiss franc versus the yen is under our yen crosses. All right, Swiss franc versus the yen. Let's have a look at what it's doing on our beginner strategy. This again looks mid-range to me. So we need to, the thing is again to make money in the market, we need to find pairs that looks good. Let's do a quick top-down analysis on this particular pair. Yeah. So prices are trading in this level now, and this is our weekly chart. So what has prices been doing for 1, 2, 3, 4 weeks, 5 weeks? It was unable to get past that level. So that becomes important to me. Now, it is important because we have a little bit of action there with regards to the EMAs. We place it a little bit in the middle of the wick and the body. And then we look to the left and we see there's action there. There's something going on there. And here it broke through and comes. So that's a decent looking level. If prices decide to go up, where would my next target be? That could be a target up there. And look at how nicely it corresponds to with my 200 period moving average. Down would be somewhere here. This is where prices has come from. So I place my line and I start moving it to where I see the most times it's been respected and touched. If there was an EMA there, it would be easier. But I'm going to take there in the middle of the wick and the body. So there's my wick. So let's just place it and where there are the most touches. So now these are nice little areas, a nice playing field. In this case, we have 2. If we see prices are accumulating here to go down, and then I have 200 pips to get, yeah? And if I see prices are going to go up, then I have 180 pips. So what could my bias be? I would like more money. So I would like to target this. I would like this to be a manipulation to go short. So now I'll build my case on that. So we have like a trend line. We are below the 200 EMA. So what I'll start doing is looking for manipulations going short. Yeah. So that is my analysis. You see, I don't need to go anywhere much further here. If I do decide to drop down, then I can see here is a wedge here. So what we could do, we could highlight the wedge and then look for that manipulation outside the wedge before going short. So there's going to be, like Elliott Wave, always have 2 different scenarios once you are wrong in a particular scenario. Like this is my wedge, so I'll be looking to for a manipulation going short. The Heikinashi is there. It gives the way that the Heikinashi candle is calculated is what I'm interested in here. But it's the pairs that you are asking for is not showing the strength of the Heikinashi really. Yeah. The because we're looking for trending pairs like let's go back to the dollar crosses and the Australian dollar. Okay. The way the trend is looking here, if you look at the way the trend looks here, this is a downtrend here on the 4 hourly. If you notice the way it looks, right, and then compare that to the way it looks on your Heikinashi candle. Yeah. Everything just seems to be pointing downward, and our candles are more smooth as compared to traditional candlesticks. And that's the way they are calculating each candle. With Heikinashi, this candle takes into consideration what happened on the previous candle. Whereas with the traditional candlesticks, we don't have that. It's independent of one another. Traditional candlesticks, this candle doesn't depend on this one. It only depends on the open, low, close, and high of that candle. But this one takes into consideration that one and then averages it all out. But we don't need the calculation really. We just need to know that it looks smoother, and it is smoother. This is the reason for Heikin-Ashi candles. It smooths out the price action. Let me show you how I would trade this. Yeah, I would see it's going down. This is a volatility indicator here, my blue line. So whenever prices are touching the blue line, I'm interested to sell. Now look at how it works with that. So every time in this area here, so you've missed the big opportunity here. You'd like to get yourself into the trade. Let's just do the top down again quickly. As we said before, we like the way this thing looks. It's going down. Where do we want to go till? Up until there. Where did it all start? It started up there. Yeah, we measured that playing field. And then we dropped down. And then we started looking for our setup there. But we've missed that setup. But we know we want to target that area. So how do we target that area? We drop down to the 4 hourly. What is prices doing on the way toward there? It is trending. We have two different types of way charts move. It accumulates and it trends. It accumulates and it trends. It accumulates and it trends. So if you identify where it's going to trend to, or where it's most likely to trend toward, then that's your goal. If your goal is big enough, if you like 80 pips, then you can trade on the lower time frame to get that. But how do you do that? You do that by identifying the trend, and Heikin-Ashi does that much better. So that was a trend down there. It respected my 12-period moving average. Now, that whole area becomes interesting. Any shorts there, I want it. So I'm dropping down to the 15-minute, and I am looking for opportunities and stop-ons in that area. I'm looking for this, that area, this area, there, and there. Do you see how it respects the white line and it has a trend line confluence? So when prices goes up into an area like this, what am I looking for? I'm looking for a setup. You so far know one setup. Let's see if it would have if it would have given me a setup in that area based on the beginner strategy. You know you're looking for that, yeah? Do you see that you are looking for this is an area to go short? Yeah, you see that. And it's because it has a trend line and it has the confluence of the EMA here, in this case, the 200 EMA. And also, if we go to the 4 hourly, you can see it's respecting the 12-period moving average. So we have confluence, a reason to want to go short as prices are going up. Now, prices are going up and we are putting our indicator on. Now you only know the one, and there you can see we have a divergence there. You see that? There. You knew you are waiting for an area to go short, and it's that one. And you get a divergence on your RSI. Yeah. So what the whole thing is all about is finding out where do you want to go. Yeah. Which direction would you like to trade? And that is based on a top-down approach. Now, we're going to go deeper into a top-down approach Yeah, to identify the direction, to identify the targets, and to identify the potential entries. That is what our top-down analysis does. And that is done on the weekly. We identify all that stuff on the weekly. Yeah. Then we drop to our daily chart. So now it's highlighted even better. You wanted to know how to identify the trend change. Now, the trend change is when you have a trend going up and a trend line is broken. So that's a confirmation that the trend line, that we are changing into a new trend now. So we have our trend line break. This is going ahead of ourselves now. I'm going too fast here. So that's our trend line break. So as soon as it breaks, comes back close to a EMA, and then we start looking for shorting opportunities only up until we get to our target. Then when it gets to our target, we still have a position left. Now with the risk management part, I'll show you that, how you manage all of these trades right up until this area. And you should have a position left in the market just in case it decides to crash right through. And then when it crashes right through, then that is the potential for the thousands of pips. Yeah. So, but I think I might be going too fast here. So how it's going to work is that the top-down approach is going to be one lesson. Yeah. And then the entries and the targets, and that is all going to be a different lesson. Let me just see how it goes in the course quickly. Yes, Alex, the Aikanashi is to smooth out so that you have a better direction. Yes. So we are here now, and I feel we need to spend more time on the monthly and the weekly. Then we'll drop down to the daily and the trends, identifying that, and then the 4 hourly, and then after that the triggers. And you see, each of these are a thing in itself as well. But you're definitely first going to need a good grasp on everything about the top-down analysis first. Does that sound good to you? That we first need to concentrate on the top-down before we start looking at the entries and all of that. Yeah. I'm going to send you assignments to do. Yeah. And I'm not going to continue until the assignments are done, because the assignments is going to be the only way that I know that you know what's happening with that portion of the work.